QuickBooks Pro Desktop 2021. Tax line mapping, tax entry, tax depreciation. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our S-Corp test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. Prior presentations, we exported the information from QuickBooks directly to the Lacerte tax software and to Excel, then mapped that information to the tax return, and now we're working on reconciling with our Excel worksheet. Last time we entered a depreciation entry having a difference for both the book and tax depreciation, noting that depreciation is often a complex issue given the fact that it needs to be tied out to the depreciation schedules, which will often be done and generated within the tax software, often for both tax and depreciation bases. If we have a difference between the two, noting that sometimes the company might just simply be on a tax basis to simplify the process. So last time we went over to our tax software here, we entered the information for the book depreciation now, and it's going to be differing from the tax depreciation. So we recorded this on the book side of things, current year depreciation at the 14,286, tax at the 19,592. Now on the basically balance sheet for the tax return, we're going to have the total accumulated depreciation, which will tie out to this book depreciation if we add those up to what's on the book side of things, the 33,878. That's what's on the tax return for page 4. If we go to page 4, which has the balance sheet in essence, that ties out. That's the book side of things. That's correct. But on the tax return, of course, we're going to be able to deduct the tax side of things. So if I go to the tax return up top or the first page, the actual deductible amount is the 24,490. That then should tie out to the depreciation schedule for the tax side of things, which it does. So that's we have a difference there. That number, when it pulled over, wasn't generated from the tax line mapping. It didn't get pulled over directly from QuickBooks, but it's being drawn from here. So now we have to make sure that our side, that we're reconciling that basically in our whatever reconciliation process we're using, we're going to be using Excel. Now note, if I go to the 1120S to page 4, we see the reconciliation right there. There's the difference. There's the 10,204. That's the difference in the current year depreciation being recorded on book and tax. I want to record that then on our side of the system in our tax software. So I'm going to go to the tax software and make the adjustment on the tax side. So we recorded the book side, now the tax side. Now, I think the easiest way to do this is to reverse the tax entry and then record the book entry. So what I will do, I'm going to add another column. I'm going to go to A and insert another column. And I'm going to call so I can just label this a tax entry or tax 1 entry. And this is going to be, this is an A1 entry. That's going to be the adjusting entry. This is going to be a tax entry. So I'll say tax 2. I'm just going to keep the numbers going down, but I want to indicate whether it's a adjusting entry or tax entry. So the first one, I'm going to reverse what we did on the book side instead of recording the difference. Now I could simply record the difference, and it might be easier to kind of tie into the tax return. There's the difference, but I think it's easier to record the depreciation on the book side for the current period. So I can actually see what the depreciation is on the schedule for the tax return. So what I will do is typically reverse what happened here. I'm going to put the credit on top. So I'm not going to reverse the accounts. I'm going to keep the accounts the same, but put the credit on top, the debit on the bottom, which disturbs some people, but I think it's the easier way to do it. And so we're going to then record this out. So we're going to credit the depreciation now on the tax side of things, just simply reversing what we did, which will bring us back to 0 down here on the tax side of things. So we'll simply reverse that out. So that brings us back to 0 on this side. And then on this side, we'll bring it back to that 19,592 by reversing out the other side. So we'll reverse this out. Now we're back to that 19 here. So now I'm going to record it. I'm just going to re-record it, but this time using the tax basis rather than the book basis. So now we're just going to basically record it again using the tax basis. So same transaction or same journal entry, adjusting entry, depreciation. The other side's going to go to the accumulated depreciation. And then I'm going to pull the amounts now from the tax line. So not in QuickBooks, but Lacerte. And then we're going to go back to the tax line here And I should be able then to go to the tax. I like to go to this one, and it should be that the 24,490. That's the one, 24,490. That's the tax depreciation, 24,490. And then we'll credit the 24,490 on this side as well. Let's go ahead and post that out now. There's something in here, so I'm going to double click on it, go to the end of it. I say plus, and then I'm going to pick up the 24,490. So there's the 24,490. And then on this side, I'm going to say there's something's in it. I'm going to say plus. Now, I've never put a negative in this worksheet because the negative is over here already. So plus that negative number or plus the credit, which will bring it up in the credit direction, which is the 4482 on the tax accumulated depreciation side of things. So now we have the 24,490, and we can see that 10,204 difference. That 10,204 then is what's on page 4. If I go to page 4 of the 1120, we see that, page 5 in the M1 adjustments, we see that 10,204. That's the difference between the two. And then if I go back to the page 1, we have the 24,490. That's being recorded on the tax basis, which we have here, recorded on the tax basis. That looks correct. And then on page 4, where we have the balance sheet, we have it recorded on, this accumulated depreciation is on a book basis. So the tax return records the current depreciation on a tax basis. The balance sheet records the accumulated depreciation on a book basis. The difference between what's being recorded on the tax return and the books for the income statement here on the M1, showing us that reconciliation, which we're seeing on our side. We're just simply mirroring it on our side. And the fact that we record the tax depreciation, reverse it, and then record the book depreciation, then reverse it, then the tax depreciation can give us a clear example of what is actually happening here. Then you might want to put notes here, and you could add a note and say I want to have a comment or a note and say this is book depreciation from book schedule generated from tax return or something like that, right? And then here you could say a note. I want to have a note here saying this is to reverse book depreciation to then record tax depreciation. And then here we're going to say note. And this is tax depreciation from tax depreciation schedule. And so then we have that. And that's going to give us, some of our adjustment in terms of this is the original book net income. Then we recorded the depreciation. This is book net income after we recorded the depreciation on the book side of things. And then we have the adjustment here for the tax depreciation. And so this is going to be our net income after we have that adjustment. Now, of course, we're not tied out yet to what is on the first page of the 1040. We're at the 8810 here, so we still have some other items to take a look at, but that depreciation is often one of the more complex components.